Yo, picture this, bro. The king of Bitcoin just straight up vanished from Nasdaq, and we're talking a jaw-dropping $50 billion riding on the line. Nobody saw it coming. Nobody. I'm not exaggerating when I say this could be the single wildest shakeup in crypto history. And if you're holding Bitcoin, you better be paying attention right now. Michael Saylor, the dude who flipped a boring software company into the biggest Bitcoin machine on the planet, just got hit with the kind of Wall Street backlash that feels unreal. Like, one minute, he's the hero. The next, poof, gone. And the crazy part? This isn't some small-time stock drama. This move could literally send shockwaves crashing through the entire crypto market. Now, imagine Nasdaq blinking him out, just like that, and all the automatic machines, ETFs, and passive funds programmed to track this index suddenly freak out and start selling his stock like it's going out of style. Millions, maybe billions of dollars flowing out in a flash. Your Bitcoin, my dude, your crypto bag, it's about to get tested like never before. And while everyone else is scratching their heads, Saylor's sitting at the center of a storm that could rewrite how markets react to massive winners. And here's the part that's gonna make your jaw drop. The deletion from Nasdaq isn't just a slap on the wrist, it's a trigger, a force multiplier that could crush prices and send panic through investors faster than any bear market you've seen. By the end of this video, you're gonna see why this isn't just a story about a stock. It's about who really controls the future of money and why January 15th might be the day the game changes forever. Yo, picture this, bro. The king of Bitcoin just straight up vanished from Nasdaq, and we're talking a jaw-dropping $50 billion riding on the line. Nobody saw it coming. Nobody. I'm not exaggerating when I say this could be the single wildest shakeup in crypto history. And if you're holding Bitcoin, you better be paying attention right now. Michael Saylor, the dude who flipped a boring software company into the biggest Bitcoin machine on the planet, just got hit with the kind of Wall Street backlash that feels unreal. Like, one minute, he's the hero. The next, poof, gone. And the crazy part? This isn't some small-time stock drama. This move could literally send shockwaves crashing through the entire crypto market. Now, imagine Nasdaq blinking him out, just like that, and all the automatic machines, ETFs, and passive funds programmed to track this index suddenly freak out and start selling his stock like it's going out of style. Millions, maybe billions of dollars flowing out in a flash. Your Bitcoin, my dude, your crypto bag, it's about to get tested like never before. And while everyone else is scratching their heads, Saylor's sitting at the center of a storm that could rewrite how markets react to massive winners. And here's the part that's gonna make your jaw drop. The deletion from Nasdaq isn't just a slap on the wrist, it's a trigger, a force multiplier that could crush prices and send panic through investors faster than any bear market you've seen. By the end of this video, you're gonna see why this isn't just a story about a stock. It's about who really controls the future of money and why January 15th might be the day the game changes forever. Yo, listen up, fam, because this story gets absolutely insane. Michael Saylor, the dude who ran a software company nobody even knew 3 years ago, now straight up controls more Bitcoin than entire countries. I'm talking 649,870 BTC. That's over $54 billion, just chilling in MicroStrategy's vaults. Think about that for a second. A boring software firm suddenly turned into the largest corporate Bitcoin whale on the planet. And every time the crypto price spikes, Saylor's empire is basically printing money. It's wild, bro. And here's the kicker. He didn't stumble into this by luck. This was pure vision, pure balls, and an insane appetite for risk. While other CEOs were playing it safe, fiddling with spreadsheets and quarterly reports, Saylor saw the future and went all in. And man, it paid off. MicroStrategy stocks started climbing like crazy, investors were popping champagne, and crypto enthusiasts everywhere started salivating at the thought of owning a piece of the king's strategy through regular stock. But while you and I are thinking, wow, this guy's a genius, Wall Street isn't clapping. Nah, they're seeing red. And trust me, it's not just a little irritation. They're straight up mad. Because the rules of the game aren't designed to reward someone who goes that big and wins.
Now, the irony here is savage. Saylor executes the trade of a lifetime, shareholders are making crazy gains, and the company outperforms nearly every major player in America. But instead of a standing ovation, the system basically says, "Hold up, bro, you're playing too hard. You're breaking our rules." That's right. The very thing that made him a legend could also be his biggest liability. Wall Street, the Nasdaq, all those index committees, they don't care about vision, they care about control. And when someone exploits the loopholes in the system, yeah, it triggers alarms. And that's where things get sticky. Because this isn't just about a company winning big, it's about the system punishing you for winning too hard. It's about what happens when the traditional financial machine runs into a disruptor who doesn't play by their playbook. Saylor's empire, his Bitcoin stash, his convertible notes, everything he's built, suddenly it's in the crosshairs. And trust me, the consequences are about to ripple out in ways most investors aren't even ready to handle. By the time you see what's next, you'll realize this isn't a normal story of gains and losses. This is about power, control, and the forces that move billions behind the scenes. And here's the part that's going to blow your mind. This setup, it's about to put Michael Saylor and the entire crypto market on a collision course with rules, algorithms, and systems designed to crush anyone who wins too big. Buckle up, because what comes next isn't just crazy, it's a full-blown financial thriller. Yo fam, you're not gonna believe this, but here's where the game flips hard. Michael Saylor, the Bitcoin king, is now staring down a rule book that could straight up destroy everything he's built. See, Nasdaq has this diversification rule, right? And get this, the rule says if more than 50% of a company's assets are tied up in one single investment, boom, you're breaking the law of the index. And guess what? MicroStrategy's Bitcoin stash? Yeah, over that limit, bro. That's right, the very thing that turned a nobody software firm into a global crypto legend is now the exact thing that could trigger a massive liquidation. Picture it. You've got billions of dollars in Bitcoin, a company that's killing it in the stock market, investors making mad gains, and then the Nasdaq committee swoops in and says, "Nah, bro, you can't play like that here." And once they flip that switch, there's literally no undo button. No, wait, we'll reconsider. The system is built to enforce the rules mechanically, and when that happens, every single algorithm, ETF, and passive fund tracking the index goes haywire. It's like a chain reaction ready to detonate. And the wildest part? This isn't a maybe thing. The deletion is set up to happen automatically if MicroStrategy doesn't magically diversify fast enough. All the trading bots, all the passive funds, all the big institutions, everybody programmed to track Nasdaq 100 suddenly gets an order to dump his stock. And I'm talking hundreds of millions of shares flooding the market faster than humans could ever blink. Your Bitcoin portfolio, the crypto you've been holding for years, could feel the shockwaves before you even realize what hit you. And here's where it gets straight up scary. One committee decision, one small oops in the rules, and we're talking billions disappearing across the board. MicroStrategy's stock doesn't just drop, it gets mechanically liquidated. And the ripple effect spreads through Wall Street, through ETFs, through hedge funds, and right into the crypto markets. It's not just theory, bro. This is real. And the moment the Nasdaq 100 committee makes their move, the financial dominoes start falling. So now you're probably asking yourself, how does a single company's deletion turn into a full-blown wealth catastrophe? How can one rule wreak havoc on the market? Stick with me, because what comes next is where things get absolutely apocalyptic. We're about to break down the forced selling, the ETFs, the robots, and the real reason why Michael Saylor's Bitcoin empire could be hanging by a thread. All while most investors have no clue it's coming.
Yo, check this out, fam, because this is where things get downright savage. Michael Saylor's deletion from Nasdaq isn't just a headline, it's the launch button for a financial death spiral. And the robots running Wall Street don't give a damn about your feelings, bro. Once MicroStrategy gets booted from the Nasdaq 100, every single passive fund, ETF, and index tracker that's hardwired to follow the index suddenly goes into full-on autopilot. We're talking QQQ, Vanguard, BlackRock, trillions in assets, all programmed to dump MSTR stock instantly. And I'm not joking. Millions of shares get pushed onto the market like it's a fire sale. No mercy, no strategy, just raw mechanical chaos. And here's the kicker. When the largest corporate Bitcoin holder in history gets forced to sell, the market straight up can't handle it. Prices start dropping fast, liquidity vanishes, and panic spreads like wildfire. Retail investors freak out, hedge funds scramble, and suddenly the very thing that made Saylor a legend is now the trigger for a market-wide meltdown. Think about it, bro. These algorithms don't care about fundamentals. They don't care about vision. They don't care if Bitcoin is the future. They only know one thing: sell now. And that's exactly what they're going to do. But it doesn't stop there. The more the machines sell, the faster prices drop. The faster prices drop, the more margin calls trigger, forcing even more automatic selling. It's a loop, a spiral, a cascade that makes any normal market crash look like a gentle hiccup. And while this is happening, MicroStrategy's convertible notes, debt obligations, and Bitcoin stash are all tied into this mess, meaning Saylor's empire could be under pressure to liquidate even more. Every forced sale feeds the spiral, and the entire system starts feeding on itself. And here's where it gets absolutely insane. This isn't just a stock problem. It's a Bitcoin apocalypse waiting to happen. Imagine billions of dollars in corporate Bitcoin being thrown into the market at once. Traders shorting left and right, market makers pulling liquidity, and retail holders frozen, watching their portfolios bleed. The ripple effect touches every corner of crypto and traditional markets alike, and it all starts with a single mechanical decision by the Nasdaq committee. Stick around, because next we're diving into how Saylor's convertible notes and debt play into this death spiral. And trust me, once you see how leverage, forced selling, and Bitcoin intersect, you'll realize why Wall Street might just be setting up the ultimate financial trap, and why the story is far from over.
Yo fam, lean in because this part gets straight up wild. The banks aren't just chilling while Saylor's stacking Bitcoin. Nah, they've been quietly building their own positions behind the scenes. They've been watching the crypto king, letting him do all the heavy lifting, buy up insane amounts of Bitcoin, and basically make the market. Then, when the storm hits, they swoop in and cash in at his expense. Savage, right? And here's the thing, it's not just about Saylor getting played. Your Bitcoin holdings, yeah, they could get wiped if this goes down the way the pros are warning. Imagine billions of dollars in corporate Bitcoin forced onto the market, liquidity collapsing, price plunging, and every retail investor and early adopter getting burned while the big players silently buy in at fire sale prices. It's a setup that's almost too perfect to be coincidence. These traditional financial giants don't need to make a move openly, they just let the system work for them. Saylor does the risky, all-in moves, pushes the market to insane heights, and the old-school banks sit back, ready to snatch up the assets at a discount when the rules they control finally trigger the dominoes. It's like a slow-motion bank heist, but the loot is billions of dollars in Bitcoin, and everyone else is just collateral damage. And bro, don't sleep on this. The mechanics are brutal. Forced selling from ETFs, automated liquidation, convertible note triggers, it all lines up perfectly with what Wall Street's been quietly preparing for. Your portfolio, your retirement crypto stack, your dreams of holding Bitcoin through the next bull run, they could all get hit if Saylor's empire starts getting liquidated. But here's the kicker, the clock is ticking. This isn't a maybe sometime in the future thing. There's a deadline and it's coming way sooner than you think. One committee meeting, one rule enforcement, and all the pieces could start moving at once. You want to see how it all connects? Because what happens next isn't just theory, it's the moment that could turn Saylor's Bitcoin win into a market-wide nightmare.
Yo fam, mark this down, because January 15th ain't just another day. It's the day the system flips the switch and Saylor's entire Bitcoin empire could be hanging by a thread. Circle it on your calendar, bro. This is the moment the robots go berserk. Every algorithm, every ETF, every passive fund tied to the Nasdaq 100 suddenly gets the command to execute forced selling. And trust me, they don't care about logic, fundamentals, or your feelings. They just dump millions of shares like it's nothing, and the ripple hits faster than anyone can react. Picture it. Countdown timers flashing, Bitcoin charts spiking and dropping, and MicroStrategy stock ready to cascade in real time. The markets are primed, the stage is set, and one committee meeting could trigger the largest mechanical liquidation event in history. Saylor's $54 billion Bitcoin stash isn't just a number anymore. It's a ticking time bomb in a system that has zero mercy for concentration risk. And here's the insane part. This isn't some hypothetical nightmare. The rules are clear. If MicroStrategy still has more than 50% of its assets in Bitcoin, the deletion from Nasdaq is automatic. No negotiations, no delays, no chance to calm the storm. All those passive funds, all those ETFs like QQQ, they fire off sell orders at warp speed, and billions of dollars hit the market like a tidal wave. Your Bitcoin portfolio? Brace yourself, because this isn't just a market shakeup, it could be the first domino in a chain reaction across crypto and Wall Street alike. And the suspense doesn't stop there, bro. Saylor could theoretically try to sell some Bitcoin early, diversify fast, or refinance debt, but even small moves risk prices crashing. One wrong step and it's a flash crash, margin calls, more forced selling, every automated system, every hedge fund, every algorithmic trader reacting simultaneously. The chaos could make any crash you've seen in crypto look like a warm-up. And if Saylor can't pull a last-minute miracle, what happens next will shock every crypto holder. We're talking a cascade that could wipe out billions, disrupt institutional portfolios, and turn the story of the Bitcoin King into a lesson on how Wall Street really handles winners who played too hard. Buckle up, fam, because January 15th is coming, and once the switch flips, there's no hitting pause.
Yo, fam, brace yourselves, because this is where the chaos hits full throttle. The forced selling kicks off, ETFs and passive funds dumping MicroStrategy stock at lightning speed, Bitcoin starts to wobble, and the entire market feels like it's being ripped apart. We're talking billions evaporating in hours, bro. Every automated trade, every margin call, every hedge fund reacting to the chaos just adds fuel to the fire. If you thought crypto volatility was wild before, you ain't seen nothing yet. Picture it. MicroStrategy's $54 billion Bitcoin stash, the largest corporate position ever, suddenly under pressure, forced to liquidate. Prices start tanking, flash crashes hit like dominoes, and the market becomes a mechanical hurricane that wipes out value faster than anyone can blink. Retail investors, casual holders, early adopters, all caught in the crossfire while institutional robots run the show. It's savage, bro. And here's where it gets even crazier. The banks, the financial giants, the ones quietly building crypto positions in the shadows, they swoop in. Billions on standby, ready to snap up Bitcoin at fire sale prices. They've been letting Saylor do the heavy lifting, pushing the price higher while taking all the risk, and now they get the ultimate payday. Your portfolio, your dreams of riding the next bull run, could be collateral in a system designed to reward the old school players. But fam, don't get it twisted. This isn't just doom and gloom. Michael Saylor bet it all on Bitcoin. He went all in. And if he pulls off a last-minute miracle, he could flip this story from disaster to legend. Every move, every decision in the next hours could decide if the Bitcoin King survives the storm or gets played like a game by the system itself. So here's the question you need to ask yourself. Are you ready? Are you ready to survive the fallout if this flash crash hits, if billions vanish, if Wall Street turns the chaos into their gold mine? The countdown is ticking. January 15th waits for no one, and the actions of this single day could change the game for every crypto holder on the planet. Hold tight, stay alert, and watch closely, because when the switch flips, the aftermath will be unforgettable. And fam, trust me, this is one story you don't want to blink through.